Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subject sectors, looking for investment opportunities, sharing those opportunities with everybody. I'm trying to get as low as I can for you guys in the community. I used to trade back in the day. I found it to not be as reliable, or as you don't make as much money as the strategies that I've adopted today, which is buy really, really low, hold on, and ride the bull for the big trend. If that's something you want to learn, the strategies that I deploy, the three pillars: technical analysis, ratios, and market cycles, definitely try it out. The first month using that special coupon code is $25. So you get 4 Q&A sessions during the weekends that you could attend through a Zoom meeting. You get 4 midweek updates. You get to see what it's like. If you don't like it, no foul. You go for a month, $25. I don't like it. You don't have to keep going. If you like it, you can always sign up for the yearly membership. Go from a monthly to a yearly membership. Use the special coupon code and get yourself further savings if you want to stay for a year and continue learning the approaches and strategies that I apply. Coming down, Joseph Brown. I was weird. I was just thinking about this as we got some like erroneous bill in the mail from one of the hospitals from a long time ago. It says the more people who just cancel their insurance, the faster this government protected scam breaks. More and more people today are canceling their health insurance, paying cash for doctor appointments and medication. It's almost always cheaper than going through insurance. Putting the difference into a separate investment account to build up a self-insurance fund. Using DPC, direct primary care doctors that are outside insurance, better care and cheaper. And this is the average cost of the family's annual health insurance premium has jumped 6% year over year in 2025 to nearly $27,000, an all-time high. I was just thinking about this. I mean, literally, this was like a couple of days ago. And I wasn't writing anything down. I was thinking through my head. I said, okay, if we pay a premium, even if my wife's company covers some of it, if we're paying, I'm just going to round it. I think it's like $400 a month is what we're paying. So let's round up. Let's just call it like $5,000. And I have to cover the first $2,500. So that's $4,400 plus 25 on top of it. And yes, I understand that this is pre-tax money. So let's call it $5,000. Let's call it $7,500 because the deductible I think is $2,500. I think it's actually more than that. I'd have to look again. And you start getting up into these numbers like $10,000 ish, roughly speaking, if anything were to happen. So we're getting, $5,000 is sunk every year, increasing at a 20% clip. And then if something happens, I cover the first 100%. Now, if I didn't have insurance, I still cover that event, right? So if most things are covered by me because they're less than the deductible, then if I didn't have health insurance, I would be better off. I would be better off not having health insurance. The only thing health insurance would cover is against a really bad outcome or event. That's about it. So if you start adding this all up, if I'm covering the first 2,500 of every person, I think that's what it is, every single year, and I'm sinking, $5,000 into the insurance to have it, then why have it? And if it's cheaper to pay cash for it, then I would still be saving money. So I'm trying to think, if I do this over 10, 20 years, 10 years, call it 5 grand a year, multiply it out, that's 50,000, multiply it by say 50% with the increases. So that's like $75,000. And I'm not getting compounding with it. I mean, this is really something to talk about, because it's becoming my large. It could be, if she didn't work and the company didn't pay, it would be my largest expense. Health insurance would cost more than my mortgage, and food costs are more than my mortgage. So when I think about retirement, when I think about how can I be more resilient living in this world, I look at health insurance costs and I say, Jesus, why do we even have it? And I read Joseph's comment here. It's almost like I need to go see what it would cost if a bad outcome were to occur. What would be my downside? And that's kind of, I'm almost to that point where it's like, man, it's getting close, where if everyone just dumped insurance, health insurance, what would health insurance companies do? They'd have to lower prices, right? I don't know. I don't know. But this is a very interesting topic, and I think it's probably one of the most important topics to talk about, is how the heck can you mitigate health insurance? Because I think it's completely out of control. And even if I had an event, like let's just say I had to get heart surgery when I'm like 60 something years old, 70 years old, it wouldn't matter. Like I would have all of those savings would go into the accounts, and I could just cover it with cash. And if you get a 50% discount paying cash, then what the hell is the purpose of insurance? So I don't know. I'm going to have to dig into this. I don't know if I'm going to do it here recently, shortly, but I'm getting close. It says those are some low U.S. crude stocks, and we likely haven't even seen production roll over yet. So if production isn't rolling over yet, and it's going to, and our crude stocks are down here below the 5-year average range, how is the price down here? Someone tell me how the price is down here. Make it make sense. We have less days of coverage today than any time during the 2000 bull market in oil. Make it make sense. No, I'm being serious. In the comments section, if you guys have any comments on how this is possible, I mean, is this all off of the perception that more oil is going to come in the future? Do you really think, I mean, let's be honest here. Do you really think that shale oil production is going to go up with prices down? And if production is up today, and this is the resultant, it's been pulling down, maybe there's oil on water, maybe it shows up, maybe it doesn't. Like, I'm trying to make sense of this. Because in history, we've never been lower in terms of days of coverage. I mean, 5 years ago, we were using way less energy. And back in the 2000s, we were way lower than we were today in terms of oil demand. So I just look at this and I'm like, that's interesting. I'm not necessarily complaining. I'm just trying to make sense of it. And I think it's a great opportunity, obviously. Here's Shabam again. It says onshore inventories globally remain in a very healthy range and have declined meaningfully thus far in October. We are now approaching 5-year lows. American inventories remain slightly above operational minimal levels, and Chinese OPEC inventories are now consistently dropping. Make it make sense. I mean, are we going to see $100 oil here in like a heartbeat, like a click of a fingers, a snap of fingers, I should say? Here's commodities versus the S&P 500 update. It's at historic lows. A setup for the next super cycle. Surely this sluggishness can't last forever. Gold leads the way. Commodities are bound to follow. Gold's already ripped. Here we are. Here's your opportunity. Here is your opportunity. This here is probably one of the most important charts that anyone should be looking at. Now, someone would say, well, it's down. It's not going to go up. Guys, get slapped in the face. Are you kidding me? All you have to do is buy the cheap assets here and sit and wait. Oh, well, that might take a year or two. That's an opportunity loss. What are you going to do? Go buy overvalued assets over in tech? I mean, what are your options? You know, chasing overvaluation is where people get slapped in the nuts and lose all their money, right? So where's the opportunity that's better than that? What opportunity in the market is better than oil right now? And people are going to say, this is what they're going to say, well, a recession could come. Well, what if it doesn't come? What if it's already behind us? How do you know? How many people has successfully predicted recessions? No one has predicted. No one has predicted multiple recessions. They've gotten lucky, yes, but very few have been able to do anything around a prediction of when a recession is going to come and when people will panic about the recession. Are interest rates going down? Are people panicking into interest rates? No. Well, tell me where this recession signals are coming from. Is it construction employment? I mean, that is looking a little bit weak, but interest rates are going up. So you're going to try to stake in dollars with inflation going up and interest rates going up. See, it's a difficult read. This is not an easy read here. But you know what? I know for a fact that this is cheap compared to history. And it's cheaper than the beginning of the last bull market. And it's cheaper than the beginning of 1970 bull market. And all you have to do is wait. And you know what? Everybody doesn't want to wait. They don't want to wait. They think that they're going to trade their way to millions and billions of dollars. Good luck with that. Robert Friedland. Copper supply shocks set the stage for shortages. Morgan Stanley expects the biggest deficit in 22 years next year. The global surplus deficit of copper supply. This is what's coming, guys, in copper. That's your big deficits. What is between us and these deficits is inventory. And inventory is low. Does this look like a good setup? Now, let's just combine this, guys. Let's just do this very obvious. This is what's coming. Platinum looks the same. Silver looks the same. And you can buy commodity stocks at basically all-time lows against the S&P 500. There's never been a better opportunity in history than what you're staring at today. That's it. I mean, what are you going to do? Go trade over in some overvalued companies? No. This is the setup. This is it. You know, margin call, baby. This is it. And it's not just copper. Now, keep in mind, a lot of people are going to ask, well, what about these copper junior companies? Keep your eye on oil, because copper is just a derivative of oil. You dig up a bunch of earth, you sift through the dust, you collect the dust, which is copper, which is 1% ore grades, 0.5%, 0.4% ore grades, and you convert energy into copper. What if energy goes way up? Aren't electricity prices supposed to spike with AI and all this other demand and electric vehicle demand? And that's demand for electricity on top of demand for copper and materials. If we hit an oil peak in shale, just keep in mind that some of these very low ore grade junior copper companies, I don't think they're going to make the money. I think their margins are going to remain maybe at some level as the copper price goes vertical. That's what I think is going to occur. But it all depends, because in a global supply chain, depending on what is short, the thing that will go up the most is the one that stops all of the lines from running, whatever commodity that is. Is it silver? Is it copper? Is it graphite, lithium? What is it? But this is coming here, guys, and then this is going to cause prices to accelerate to the upside. It says your house is not an asset, says Spencer Hackamian. Long-term performance of stocks versus housing. He's got stocks, and then he's got the U.S. median house price. There's one thing he's missing here. So stocks are going up like that because the dollar is declining, not because the stock assets are going up. Most people don't understand that. If you have your house and you have a mortgage, do you know what's causing this to go up? It's not the S&P 500 going up. It's the dollar going down. If you have a mortgage and it's a fixed rate mortgage for 30 years, your purchasing power decline in the dollar is coming out of that mortgage. Does that make sense? So the decline of the dollar that you're paying your mortgage back, that's the same function of this pushing the S&P 500 higher. It's inherent in the mortgage payment because the dollar is declining over time. So you get to loan, let's just make up a number, a $300,000 loan. You get full $300,000 purchasing power today, and you pay it back with declining purchasing power dollars. So they're showing the decline of the purchasing power dollars, and they say, well, look at this. And then they show you the U.S. median house price. But you're paying the house back if you have a loan with that same depreciating currency. So this is not a fair comparison. You need to see what you actually paid for the house in that example. Also, if you bought the house, you get to keep those gains tax-free, I think up to a certain amount. I can't remember what the amount is. S&P 500, you're not making purchasing power gains and they tax it. So people will say, oh, this went up. The S&P 500, I don't think is beating the real rate of inflation. I think it's all inflation, and then they take 15% plus, depending on if it's short-term or long-term capital gains, and they take taxes from it. So this isn't as simple as you think. People look at this, oh, I'm going to go to the S&P and go rent. Guys, my mortgage is literally a fourth or a fifth of what I paid to rent this house. My property taxes are $2,500 a year. I am paying way less versus renting. So I don't look at my house as an investment. I look at my house as a strategic way to lock in one of my largest costs. And all I'm doing is I'm looking at the costs that I have, and I'm asking myself, how can I become more resilient? How can I reduce costs in my portfolio of costs? My big costs are food, insurance, health insurance, car insurance, home insurance. My house is way down there. And maybe taxes, I guess, would be my largest expense by a long shot. I would say it's taxes by a long shot. I probably spend more in taxes in a year than I do in all of my expenses. It's a larger expense than my house. It's a larger expense than food costs. It's a larger expense than everything. Then insurance, you can add them all up. I pay more in taxes, and that's adding all the taxes up: property taxes, sales tax, federal income tax, state tax, the taxes that are included in everything that I purchase. It is by far the largest amount. It's probably 80, well, I don't know if it's 80, but it's probably 60, 70, 80% of my total costs is taxes. And remember, there's a bunch of taxes that are all inside of everything that I purchase. I go buy food, I pay the company's tax, the grocery store's tax, and all of the costs and all this stuff that they have taxes on. It gets ridiculous. Over the past 60 years, annual oil discoveries have collapsed 90%. Low prices equal no exploration. No exploration equals no future supply. The longer prices stay low, the more violent the next spike will be. I hate to say it, but I don't think that exploration is not occurring because of low prices. I think that there's nothing out there that's big. That's what I think. So it's not that we don't have exploration. There's just nothing that we are finding. There's nothing left that's big. Do you think that we just missed some gigantic field? No, it doesn't exist. So people think, oh, higher prices, more exploration. More exploration means that we're going to find more oil. I don't think so. I don't think so. I mean, we might develop technologies or something like that that can extend something, but I don't think that there's these gigantic fields sitting in the middle of nowhere that we just don't know about. That's my take on it. ExxonMobil on global industry outlook, unconventional filled a gap in the short term, but there's an increasing focus on long cycle and exploration. Exploration is very important due to the decline rates of shale fields. I want to know where are these people going to look at? I mean, are we going to try to drill into the center of the earth underwater or something? Like where is all this oil that we think that it's located? Like, what's going on here? I mean, are we going to start to push our environmental destruction button where we need to start pushing things? I don't know. Copper will join the commodities boom, secure your rain gutters, and he's got this big cup and handle pattern that's about to break out. It's just like silver. And we're gonna launch into new prices for all these things. For all of them. We're just sitting here waiting on it. Now, a lot of people, what they're going to do is they're going to get impatient. They can't wait. Well, I don't know. If you don't want to get rich, then don't wait. I mean, I don't know what to tell you. The only way to make a ton of money is to buy crap that's cheap and you just sit and wait. That's it. There is no other fast way. The people who make money fast lose it fast. They blow up all the time. I mean, go look at Jesse Livermore. Oh, he was the greatest trader ever. He went broke like 3-4 times. The people who try to make money fast and they leverage up, and they put all their money and concentrate it, generally go broke too. And that's not being a great trader. You're just catching waves and getting lucky. Because if you went broke 3 or 4 times, you went bankrupt, you're basically, it's due to just catching the wave. And then when the cycle goes out of cycle, you screw yourself. What you want to do is you want to make money and you want to be able to keep it. You don't want to go broke. So the only strategy that I found that works is you got to slow things down. You got to buy crap that's cheap, and then you sit and wait for all these things to break out. Yeah, it's really boring. But that's all the people who are billionaires. They made their money over long periods of time. Elon didn't make all his wealth in a single year or two. He made it over decades. So did Mark Zuckerberg. Yes, they're highly concentrated in their own companies, and they were running the show. But remember, not all of the kids who started companies became rich either. It's only the select few who did, where the market chose those companies. And you know what? You could chalk a lot of it up to a lot of luck. A lot of luck. Now, some people might not like that, but if you're making many billions of dollars, there's luck involved. It's not just hard work. Right place, right time, right market cycle. You chose technology when technology was booming. I mean, it all matters. And now it's coming out in the future is going to be a big commodity bull market. So a lot of the rich people are going to be in commodities coming up. There'll be people running copper mines and oil fields and stuff like that, I think. And here's SILJ. It's the same pattern here, guys. You can't even tell the difference here. You guys can really tell the difference? It's the same chart. SILJ backtesting its 2013 high, 5x from here, pullbacks along the way. Yep, that's it. Just stay long in SILJ or silver juniors or silver companies or copper companies. You get long, you stay long, and you just sit. It's all coming. All these patterns, they're all interconnected. Copper is extremely cheap relative to gold today. This is the most extreme point in 50 years. 50 years. Grab some copper. Two very credible oil analysts see demand at 107 million barrels a day. The world doesn't work at $60 oil. We'll see. Guys, oil is so ridiculously cheap. You just get in and then you sit. You wait. Grady said 7 months ago in the post link below that a golden age for junior commodity companies is coming. The purple pattern is broken out and back tested. It's go time. And it was. Many smaller stocks moved 100 to 300% so far. The bull market of these companies has now resumed. I hope you took notice. Posted the chart below. This is the TSX Venture in the link post. So here it is, breaking out. Bullish expanding falling wedge, breaking to the upside. Broke the larger falling wedge to the upside. Measured price move is way above us, way up there. And we're in the move. It's happening. Crude oil, possible right shoulder in progress. Shoulder, head, shoulder. Potentially, we'll see if that occurs. For crude oil. Baton has now passed from gold to oil. Is this the absolute bottom in the oil to gold ratio? To me, that bullish engulfing, I think it could be. I think it could be. It's going to be a hell of a ride here. It's going to be real, real nice. Look at that shoulder, head, shoulder. And then we came all the way down back to that bottom almost. I think we're real close to a bottom here. Yep. Oil looks real good. And that's all I've got for today, guys. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We've got a question and answer session coming up 5 p.m. Mountain Time on Sunday if you'd like to join. But that's all I've got. So we'll catch you later, guys. See ya.